Today's guest on the Powerhouse podcast is Randell Gillespie. Randell was named Chief Production Officer of Lower in March 2024 upon the completion of Lower's acquisition of Thrive Mortgage. But Randell's career goes back much further than that, leading production at some of the nation's largest mortgage lenders over the last 30 years. In this episode, we talk culture, leadership, technology, margins, recruiting, and even hamburgers. Randell is a HousingWire Vanguard and has been acclaimed for his leadership style of empowerment, encouragement, and humility. I hope you enjoy today's episode of Powerhouse with Randell Gillespie, Chief Production Officer of Lower. Randell, coincidentally, you're the second member of the Lower executive team who's been on the Powerhouse podcast this summer. And I have to say, it's because you guys are doing some interesting stuff. And I think there's a lot to talk about. So thank you for joining me on Powerhouse.
Well, thank you for what you're doing.
So we just had Craig Montgomery, the new Chief Strategy Officer, a few weeks ago. We had a really phenomenal conversation. He talked a lot about supporting loan originators and attracting the right people. And he's got a career that spans several organizations where he's taken on similar responsibilities. But one of the things we talked about in that conversation is like the different roles and responsibilities inside of an independent mortgage bank executive team. I'd love to have you, as you've been part of the organization a little bit longer than Craig, even though it's been a year of a lot of change. Tell me about the executive team, how the teams come together, the roles and responsibility that everybody plays. I'd love to hear kind of how it works inside of a independent mortgage bank that is as ambitious as Lower.
That's a great question. And I'll probably start it with saying that it's really not about titles. It's about teamwork. So, you tend to have titles so people understand your lanes. Yep. And we're talking a lot about that because we've got some incredible experience. So we have Craig as Chief Strategy, myself as Chief Production, and Amir as Chief Growth. And how do we all play together? We all have some different backgrounds, but we're all passionate about the business. So I guess the way that I like to talk about it is Craig really loves to get into details. He's got an incredible background, as you heard. And certainly when you consider where he has come from, he has seen going from smaller to larger and being dominating in the business and has seen how that works. My background is that I started as a loan officer, rose up through the ranks of a branch manager, area manager, regional manager, spent most of my career at a company called Countrywide. Some people may have heard that. I was running the Midwest for them, and then have had all kinds of experiences. About a third of my 30 years is in banking, and the other 2/3 is at IMB. I'm a street guy. People who know me, if you want to offend me, call me a corporate guy. I'm on the street. I loved origination, still love helping really from a production standpoint, and we can get into some of those details. And Amir is just an incredible coach. So what we believe is the future of home lending is making sure that you have people that understand how to train and improve and make your people better every day. And we're really committed to that. And that's what Amir brings to the table as well. So that's the three of us in that respect. But we also have so many incredible teammates, more important, quite honestly, than us. There's our Chief Operating Officer, Celine, who just is second to none. I know you know her. Just incredible because she understands sales. She's done every job in the industry. I often describe her as saying, if a company could only have one person that could do everything from HR to the marketing, to the onboarding, to actually originating a loan and pricing it and, going to secondary and post-close, it would be Celine. And she's an incredible talent as well. Of course, that all is dependent upon the vision and the ultimate leadership. And that leadership being our CEO, Dan Snyder. And he's, going a mile a minute, has an idea about every hour. And so he keeps everyone on their toes. Mike Baines, one of the co-founders as well, who's more of a street guy. And again, a lot of other people in between that make up the difference. But hopefully that answered your question.
Yeah. How have you, this is a question like I have as a leader that has added executives to the team over the years. Like, how have you made adjustments? I'm sure it's been an adjustment for Dan as the executive team has changed pretty monumentally over the last year through the Thrive acquisition and recruits like Craig. Like, how does the executive team, like cadence and communication, work to match the rapid change that's happened in the company, like starting with Dan?
I think it has to start with no egos. Again, and that's hard in the business ultimately. And everybody knows what their greatest strength is, highest and best use. The other thing I think is not taking ourselves too serious. The business is changing. rapidly. I've certainly seen it over the past 30 plus years. There are things that are not changing. There's certain principles, you know that in media, certain things that haven't changed, but then the way we deliver mostly is what's changing and through technology and so on. So what does that mean? No egos, lots of communication, and absolutely everyone being on the same page as far as what the mission goes. And our collective mission is about just making this industry better, making the experience for the home buyer better, making the experience every day and the careers better for those who want to make this industry their career. So I think it's all of those things combined and making sure then everybody has a voice. One of the tenets of our organization is everyone involved. We have leadership committees, which make up about 12 different key topics of the industry, and anybody in the organization can be a part of those. And that's where we send through ideas, information, suggestions. This is not a complaint session opportunity because we should be dealing with issues as they happen. This is more of forward thinking. And as we see things in regards to compliance, as an example, or pricing or products, or certainly as there's things that happen that are monumental in the business, like we have seen where secondary markets freeze up and so on back years ago, then we have this team that can come together in these committees where we can say, okay, here's the outcome that is required, and therefore here's the multiple ways we can approach that. How do we do that from your vantage points, whether you're in a branch or you're in post-closing, you're in HR, bringing the teams together. So the purpose is to create a really collaborative effort without slowing down due to committees, because we have to move very fast as well.
So you talked about, or you mentioned that like the way we deliver in mortgage banking has changed. So what, like, I don't know if you're looking back over a 5-year period or a 10-year period, but what used to be true that's no longer true today, or vice versa? What's true today that didn't used to be true that has changed the way we deliver the mortgage product in such a meaningful way?
Well, there's the expectation of instant, because that's how every industry has changed. Yep. When you think of media, what you're in, at the end of the day, you still have to provide incredible content and information. But how that was done started with a town crier, then it went into print, and now all of a sudden, you're sending out short stories, long form, you're sending out podcast, text, and all these different social platforms. I think for our business as well, at the core of it, we're helping people get into homes, and we need to make that experience great because it is a very emotional process. There's often lots of other things that are going on in the lives of those consumers. We have to be sensitive to that. So those things haven't changed. The amount of information that we have access to, that can add some complexity sometimes, quite honestly. Fraud has just exponentially grown in our business, which makes us have to be more cautious as an industry to make sure that we're delivering the right thing. And so I guess what I would say is making sure that we're doing all these things with sensitivities and never forgetting our mission, and that is to make a great experience for a consumer while they're buying that home, that greatest asset as well as the greatest liability that they'll have. And we do it with some compassion, and we do it with education, and we do it making sure that it stays real. So with technology, one of my fears that I've often shared with others, love technology. We're a Fintech company. What does that mean? I'm sure we'll probably talk about that. But at the heart of it, we cannot let it become an experience where it's not still human to human and interaction, so that we forget what's at the core of it.
Before we jump into technology, I want to talk a little bit more about team and culture. So the Thrive acquisition was this March of this year? Is that right? March 24th?
When it became official, correct?
Yeah, when it became official. So pretty monumental deal, obviously for Thrive, but also for Lower. What parts of like the Thrive culture have like successfully permeated into Lower? And were there parts of like what you were doing previously that you wanted to shed and saw this as an opportunity to step to the future?
I really don't think so. Now, maybe I had a vantage point of seeing it all. And if there was anything for either organization, what I loved is that both organizations came together saying what's best for our people and the future. Yep. So it wasn't really a play. We know there's a lot of different reasons why we're seeing acquisitions, mergers, and things go on right now. Certainly a unique time in the business, to say the least. Every decision we were making was based on what is great for our people. Now, I got to admit, some ego came in, certainly to myself, because I'm thinking, man, we got this brand and we got this vision. But at the end of the day, we had to even step behind that and say, if this gives our people more opportunity, the complement was really cool the deeper we got into it, not only geographically, but also in regards to they had Excel Capital relationships and minority ownership. We had Veritex and a banking relationship, minority ownership. It was really cool that all of these pieces played a part. And when all of those partners met each other and got excited, we really felt like, the old saying, 1 + 1 = 10 in this regard, and bringing it all together. But it wasn't just Thrive, because there was a lot of other great organizations and groups that had been joining Lower even before Thrive came to the table. Thrive certainly had a pretty significant brand and national presence in that respect. But I would like to think that nothing got left behind, or we would not have wanted to do this. Especially culture was so critical, because for all intents and purposes, most companies are about 90% the same. Not all of them have Fannie, Freddie, Ginnie tickets, those kinds of things. We got access to FLUB, which is kind of cool, or Federal Home Loan Bank through some of our relationships. So for the most part, most institutions are the same from regard to product and what they have. Thrive certainly prided itself, Lower prided itself in having some very unique niche opportunities and products as well. And so we could bring all that together, but culture will always make the difference. Now, I have a large family. As many people know, I have 9 children. And I used to say,
I love how your bio says, I think it's at the time of writing said, and 5 grandchildren at the current count.
Exactly.
Is that still the number?
It is as of today, but I'm big into production. So, ultimately, we have a lot of fun. But I say that because I've always said, my family's big enough. I don't need another family. And in these last, 3, 4, 5 years, I've realized all the more, especially knowing that going through challenging times, you do have to have a sense of family, which means you really have to care about each other. You have to care about those people that are next to you and the challenges that they're going through. And especially when the industry goes through the challenges that it does and that we're seeing today, it's all the more important that we're all absolutely on the same page, caring about one another, watching out for each other. And so that, to me, really, when we saw that being demonstrated at Lower, and it's something that we've worked very hard at now in bringing all these multiple brands together under Lower and the Lower platform to make a difference as we look to the future of home lending.
Yeah. So when you say the Lower platform, what is the Lower platform? What are you speaking to when you use that phrase?
Probably the easiest way I can say it is if it's legal, profitable, and good for our people, then we want to do it. We've got multiple different deliveries. We're not trying to just be one thing now. Obviously, majority of our business, vast majority, is retail in that sense, but we do TPO. We've got direct to consumer. We're very creative. We've got great partnerships with everything from credit unions to real estate companies as well. And so the platform is very diverse. It allows flexibility, and that's why we do have to not get in our way with titles, but instead in that teamwork so that we can do those kinds of things. We're not looking to have a one size fits all, which having been at the number 1 company myself in the majority of my career, a company that had 20% market share, we'll probably never see that again in the business, but we do see a consolidation in the industry overall. And so we're not trying to be a one size fits all. What we're looking in is great leadership at those local levels so that we can empower them to make the best decision first for the consumer ultimately. And then again, is it legal, profitable, and good for our people? And if those are the things that are the key tenets that we can keep focus on, then we'll have continued great success using technology as well as part of all that.
Yeah. I mean, speaking of great people, we saw that you just announced in the last few weeks that Dustin Owen, who we know through hosting the Loan Officer podcast, and he was a podcast partner at our last event, the Gathering, recently joined you in a growth and divisional leadership position, correct?
Yes, he did. And, it's been fun to get to know Dustin even further. He's got an incredible reputation out there. People trust him. I was just actually at a breakfast this morning and someone made the comment about watching his podcast. And so he's got a great influence, and that's important to us. It's one of the tenets that we're looking for as we're creating this future of home lending and how to make things better and easier for our people. It's about branding. We have an initiative called Going Viral, which is wanting to be every place we can to continue to grow that brand ultimately and recognition to help for our people to develop areas of trust and opportunity then with their referral sources and their customers. Let's face it, there's a lot of information out there. Sometimes it's not necessarily the best information. And so when you can develop trust, and that comes through influential people like a Dustin. So getting to know him, hearing his heart, seeing where he wanted to go in this next phase of his career, and knowing that we could help him meet that was just fantastic. As he heard me say a number of times, it's got to be a win-win, Dustin. This is not just about what's good for us. It can't be just about what's good for you. How do we put that together, just like the lower and the Thrive, or the lower and the Universal, or the lower and the Hamilton, and so on? As we're putting those together, it's got to be mutually beneficial. And then, you know what, great things come.
Yeah, I mean, I didn't know this about him, but I'd noticed in the announcement that he had been with his prior lender for 16 years. So that's not a decision that's made lightly.
That's right.
I think that's really rare in mortgage lending, to see people who have been with one organization for 16 years, especially as an originator.
Yeah.
You look back,
Craig, same way.
Yeah. Yep. Exactly. So yeah, kudos. The organization is attracting people who don't make decisions lightly. So when you mentioned, when we were talking about the loan officer podcast and Dustin, and I mean, we're a media company, so I'll relate it back to us. What are loan officers looking to you for today in terms of information? And as a leader, I'm sure you have thousands of people in the field who are counting on you to be some source of truth for what's happening in the market. What questions are you getting? Where do you see as kind of the most critical areas that you provide expertise to your originators?
I've said it's kind of the 3 L's: lead, learning, and ultimately lean. And what does that mean? So lead generation and opportunities to get in front of that client as soon as possible. There's a lot of things that we do to help in that. Learning is critical. I think Bill Hart at the last HousingWire event did a great job of talking about the fact that we are in the era of information. And I have liked to say probably more so the era of explanation, which is why YouTube and why video is so popular, because people are overloaded with information. They don't know how to use it or decipher it. And so that's why, like in Amir, as an example, and James Duncan, as you know, who runs our marketing, and then a Dustin Owen, we lean on them to help with that learning piece. We have weekly high performance coaching opportunities that we provide to our entire organization, so that we can make sure that we're explaining what's happening, why it's happening, how to use tools and resources, all that kind of stuff. And then the lean really has to do with the fact that we've got to do all of this and stay very, very low cost, low overhead, so that we can deliver a product. It's gotten extremely competitive, especially in times like this. So we've got to be very cognizant of that. So those are the things that they're looking for. And I think that's what consumers are looking for as well. These last couple of years, you know, I look back and I think as a young aggressor, I was a top producer, and there's so many things that I wish I would have known then that I know today. I would have had less stress in the day. I would have put more focus on ultimately the outcome versus how maybe some things, you know, going on behind my back, that, you know, some game that's being played, and that requires trust and understanding. So as an example, as we've seen secondary and the changes over the last certainly year and a half, and there's times where you can't find a par pricing, and people are like, why is that? Well, when they start to understand the behaviors of investors and what does that mean and why, I love watching the light bulb go off in some of our people's minds and eyes when it's like, okay, now I understand. Now they can help explain that to their customer. They can be more confident about what they're delivering. And then let's face it, at the end of the day, that's what the customer's looking for. They're looking for a sense of confidence that they got the best opportunity for them at that time when they were going through that, not just transaction, but relationship building.
Yeah. And so in retail, what have you found as like the most effective mechanism for teaching inside of the organization? Like, how do you reach a distributed force of originators?
It's a good thing you're not asking this question of James Duncan, you know, because he's so passionate. That's why he's got the title of engagements in his title, because it's challenging him to stay engaged with our folks. I know for myself, my first goal is always to be able to say to somebody, the information was there, you just didn't take it. And I'm saying that because I say this all the time. People know me. I'll say, look, I'm a sales guy, so I can say these things. And I know how we react and respond, sales professionals. And so we have to have it across the spectrum. The first thing is to keep things simple. Ultimately, we've got to simplify everything because it's become a very complex business. Now, those who are winning, those who are successful, we got people who are having record years this year because they are now really helping themselves become the dominant force in being the expert. So there's lots of opportunities out there when you look at it from a pure volume standpoint still, but you differentiate yourself by being an expert. So how do we make sure that we're educating folks? We have these weekly high performance coaching calls, as I mentioned. We have regular newsletters that go out about every other day based on different topics from underwriting to compliance and so on. We also do a monthly all hands call for our teams, and it's meant to not just simply be, a check-in and a feel good. It's making sure that our teams feel connected and engaged in that respect. Then we have these leadership committees, and we have a leadership council, which is a chair for each person, and it's not made up of just top producers, which tends to be the case because everyone does have something informative, whether they're a top producer or not. And so we certainly have top producer events. In fact, we're getting ready for a big sales event that Amir is leading in Columbus at Lower Field, there in Columbus, Ohio, which is going to be really cool. So it's all of those things. It's written, it's audio, it's video, it's podcasts. And we're just making sure that we have met people where they need to be for our sales teams, because that's one of the tenets that we have as an organization. We need to meet our clients where they want to be and give them the information when they're ready for it in the means that they want to. Because when you think about the diversity right now in the demographics of people, you've got some who still don't use any technology, and then there's those who use all technology. I was posting, I thought something informative. I got into road biking a couple of years ago and just really loving it. So I got the cleats, and the whole thing I clip in. And let's just say I've gone through my own embarrassment at times of falling over in the road and looking like a stuck turtle, being a little embarrassed in that process. And I was posting about what I learned in that, about sometimes you have to get embarrassed to get to the next level. And someone kind of blasted me a little bit on LinkedIn and said, get with high tech. You need to get a Peloton and stay safe in your house. And I'm thinking, you missed the point. I don't want to be in my house on a Peloton. Nothing against it. And I've used a Peloton. But part of the experience that I enjoy is being out on the road. So we have to be careful about forcing people to want to do things the way we want to do it. If we're truly going to provide a great experience, it means providing it the way that they want to. Do they want it in text? Do they want it by a phone call? Do they want it in an email? Do they want it through social media? There's so many ways, and that's why we have to be great communicators.
I couldn't agree more. I mean, it's one of the things we learn as a media organization, learning or serving this industry. Like this conversation, we're called a podcast, but we'll publish it on all the podcast networks of Apple and Spotify. It'll be available in audio on HousingWire.com. It'll also be on YouTube, and then there'll be an article right up, and then it'll go on social, because that everybody isn't everywhere. And there's loan originators who love our podcast and will listen to this on audio. There's others that are going to throw it up on YouTube at their workstation while they're at the office. There's others who might pick it up in the newsletter and read it on their iPhone tomorrow morning as they're getting ready for the workday. And everybody consumes information differently.
Exactly. And that's expensive, right? I mean, you have to deal with that. And we as a company, you're right. There's times I'm reading your articles on my phone, it pops up, or, the podcast as an example, or I'm at my desk. Sometimes I want to just listen to it while I'm exercising. And sometimes I want to watch it, with the sound off. And so it does put a lot of demand on us, but it's what people need ultimately. If we want to educate and inform and clarify and explain, that's what we have to do.
And there's also, it can be expensive if you do different content in every medium, but we've subscribed to this idea of a content flywheel, where a singular interview like this can flywheel into multiple formats. And that's expensive. We have team members who have to go produce those assets, but it ultimately is what the audience needs. And it might mean fewer stories told in more formats, but as long as you're getting the right content and the right message across, then mission accomplished.
It's all about content. And I think where you guys have done so well, and again, thank you, kudos to you. You and I have talked about your history and your vision of this HousingWire and where it has come from and where it has gone. I was mentioning to someone I needed to get to this interview with HousingWire, and they're like, HousingWire, wow. I mean, you have a great reputation. Because that's not only great content, but your sincerity and the sincerity of the people on your team comes through. It's loved. And then when you look at your event, as we talked about, the gathering, what an incredible event that you host, because it's not just talking at you, which so many are, but it's giving you content. So exactly. Thank you for setting that example for the rest of us.
I appreciate that. And like the events have been a heavy lift getting off the ground, but we're starting to get to the point where we have, guests and speakers like yourself who, come back year in, year out, and then start contributing to the content. And we're getting ready right now for our HousingWire IMB Summit on October 1st. We're doing it here at our home market of Dallas. And I wrote down your 3 L's because I'm going to pull that into a session. So I'm flywheeling content from this into informing something that's going to be on stage on October 1st at the IMB Summit. So I think it's all connected.
It is.
All right. So Fintech. So you talked about some of the complements that came together with Lower and Thrive. The capital complement is really interesting. How Veritex and Excel are enabling kind of a different growth pattern. But let's also talk about the tech complement. What is the technology and the Fintech strategy for Lower? Then we can go deeper into what loan originators need and expect today.
Well, the sexy big part, first of all, thought was pretty cool as I was doing my own due diligence, and to see that Lower was recognized as one of the top most innovative companies in the world by Fast Company. Because I like reading Fast Company. I love to kind of be ahead and to see some of the innovations that are happening in our world in general and how do they apply to what we do and deliver for our customer. I love this business. As you know from my bio, I was actually going to go into criminal justice, law enforcement. I was a military policeman, and people say, how does that relate ultimately to mortgage? It's helping people. And in order to help them, you have to make sure that you've got the latest and greatest bells, whistles, tools, resources, and those kinds of things. So Fintech, specifically, what are some of the things that Lower delivers? It's first a mentality, not that technology will fix everything. Because again, do we have a direct to consumer? Do we have a very ease? Do we see in the future where it's kind of a do yourself? DIY? We do, and that's some of the innovation that the company has designed and developed, which is really cool. At the same time, we also know that it's still about relationship building and being on the street. So Fintech to me today, and how I explain it, is really that you're meeting people where they need to meet, want to meet, in the information and way in which they need it delivered. For a loan officer specifically, it means, how am I going to highest and best use the skill set that I have? We've got some people that are fantastic at relationship building, deal structuring, those kind of things. So anything they can do to save them time, to allow them to do that, fantastic. We see that in the medical field as an example, or again, you have it in media. But then there's others who are really techie, and that's what they love to do, and that's their strength, and so they'll drive their business that way. I personally think that's one of the cool things about our industry, that if you're really good at something and you're disciplined enough, you can be successful. Just leverage that and be in the model like we have here. That's going to help you leverage that to your highest and best use. So that's really, I think, at the heart of what it is. So you think about, I was high tech back when I got in the business, beginning of the 1990s, because I had a pager, and then I was the first one to carry a cell phone. I thought I was really cool, and people could get a hold of me, and that was one of my selling points. You can reach me anytime. And then from there, the BlackBerry, if you remember that, or the Palm Pilot, I started tracking all my pre-approvals on a Palm Pilot. So agents were really impressed that I knew what was happening with each of their clients wherever I was at with them. So we see this technology continue to develop now with CRMs, and we have cool things like TCA from Trust Engine, which is really cool. And you can provide customers with multiple options so they can see it and be trusted. They trust you because now they see you being transparent, which is really, really critical. It provides then our people with more opportunity than to develop a deeper relationship with their client. That's really incredible. As you know, some of our history that both companies brought to the table is something that is really techie, from RONs and eClose being early adopters to things like the pilots for positive rent payments as an example, and so many new innovations that are still coming out ultimately. So I think your question being really, what are some of the technologies? It's not only using the lead gen technology that Lower was really excellent at. There was also bots and automations that Thrive was bringing to the table on top of it, because R&D is expensive. And so when we can marry all those together, and there's a lot of new stuff that's coming. I mean, or being used today, whether it be RPA or OCR and all of those kind of cool things, it's to save time. We're in an industry where there's a lot of clicks, a lot of minutia sometimes that has to occur. And when you can create automation to help save you that time collectively, then ultimately that keeps your costs down, helps you have more time to lead generate, to have engagement with your buyer and so on. So that's really what the complement was. And I think what both companies were bringing together, and especially Lower, and their passion to not settle for what they've done yesterday, but making sure that tomorrow we're better than today.
Do you think that there's a divide or like a chasm between the technology that loan originators like demand and need to be at their highest and best use, and the technology initiatives that banking executives are currently prioritizing around like efficiency and operations? A lot of the AI conversation actually isn't necessarily all like loan officer complementary. So I'm kind of curious if you, how you think of like the tools and tech that loan originators demand and like where energy is going in the industry today.
Boy, that's a great question. And I know one of the hot debates at a lot of the conferences is that, are we really using technology? Is it getting our costs down? Or are we just transplanting that cost into engineering and everything else? And it does seem like that's the first ceiling you got to get to. Beyond that, then through scale, ultimately, it does start to bring your cost down. And there are innovations that I see on a regular basis that looked cool, seemed like maybe they were something that was going to be an advantage, and then it's not used. That's one of the things I've seen, certainly my entire career, when you talk about different resources and tools that are available. And one of the sayings that I tell my people is, don't worry about what you don't have, worry about what you don't use, that you have access to, that you're not leveraging yet ultimately. Because there's so many times where we just think, if I had that, it's going to make a difference. But you have to be able to execute with it and you have to use it. We've got so much technology. There's times where people are like, they get overwhelmed. James gives a presentation about all the cool marketing and lead gen stuff that we have. And people are like, overwhelmed. And so
is that in his court, like leading engagement? So like,
it is.
Like, I mean, that's an issue across the industry though. And not just in mortgage, in real estate and pretty much any industry with like distributed sales forces, adoption of technology tools. And then also a lot of organizations, I think it's getting a little bit thinner right now, often have duplication of tools inside of their organization because one sales team demands this point of sale system and the other division and this part of the country demands this, or maybe even in one branch there's two different like point of sale or LOS systems. So like how do you what's like the kind of philosophy on like tool utilization and engagement? Like how are you propelling that?
It's transparent challenge, maybe is the way to put it. You have to have good business intelligence. So when someone says something about how, I heard about this new tool. I'll give you a perfect example. Somebody recently, I was talking to them and they're like, wow, did you see this other company just rolled out this automated underwriting for self-employed borrowers? And I'm like, oh, like LoanBeam? And they're like, oh, and they had their own opinion about LoanBeam. I'm like, okay. So the perception is that's going to fix it. But we all know the reality. There's no perfect solution or no perfect technology. You do have to be disciplined, though, in just executing on it, know where its strengths and weaknesses are. CRM, obviously, there's some really great CRMs that are out there, but there's not a one size fits all. Look at the number of different cars that there are based on what people's needs are, how they use them, and so on. And so it's one of the discussions we have had. We've got several different CRMs that we leverage. One key that is plugged in or tied in ultimately to our LOS. And what we're having to answer the question for is recognizing that not everybody likes just one particular type. Some like much more robust. Others like much more simpler. At the end of the day, what do you use? What will you be consistent with? So what we're trying to do is for the masses, automate stuff. And then those who are really prescriptive and have a particular nuance or focus, then they are able to do those kinds of things. So we have what we call provided. We have what we call partnered. So provided, it's automatically part of our model. Those things that are partnered, meaning, all right, we're going to share in the cost. We're going to get enterprise accounts and so on to lower the cost. And then there are those things that are possible because we don't want to shadow stuff out there that could create technology glitches. So let us know what you're using, what you want to use. Let's make sure it's going to have a good complement to our system, but we want to make sure that people are able to use the things that are going to be good for them.
You just changed the way I think about something like that. So I've always looked at organizations in our industry that have like duplicated elements of their tech stack. CRMs is a perfect example, as kind of as clumsy or ineffective. But I think you just kind of changed the way I think, and that there is like inside of one organization, not every branch, not every originator does business the exact same way. And maybe there is a tool for the masses, but a different path or an exception or a different tool for somebody who just runs a slightly different business model.
Yeah. Years ago, I was in a BNI and somebody posed a question. He looked around the room and he said, what's your favorite hamburger? And there was 12 of us, I think, there, and everybody had a different favorite hamburger. And then he said, who sells more hamburgers? And it was interesting because the one that sells the most hamburgers was not any one that anybody recognized as their favorite. And the lesson from that was, if you can not only have a consistency in a delivery, but also individuality, if you will, for the individual, that's really where you get to a whole nother level, I think, of success. And I think that goes back to the platform that we're trying to provide, making sure that we have a consistent platform that allows then for flexibility within that platform based on the strengths and weaknesses and the markets. So as I grew up, I started in the Ohio market, and then I eventually moved into Pennsylvania and Illinois and West Virginia, and then, started serving in national roles. And one thing is for certain, everybody says the same thing, Clayton, and I know you hear this. Everybody says, but my market is different. And I used to argue with them and say, no, every market's the same. But now I say, you're right. Every market is, your market's different, but so is every other market. They have their nuances. Some have a north and a south. Some have an east and a west. And it's ultimately making sure then that a one size does not fit all. James Duncan coined this, and I love, he says that one size fits one. That's what we ultimately want to deliver, whether it be marketing and so on. We can educate. We can help show what are easier paths. We can show what might be more easily automated. But at the end of the day, if you've got a referral source that does things a certain way, and this is what they need, then we have to meet them there. We can educate them and we can help them. And at times we do that. So as long as then once we do that education piece, but they still are adamant about this is how we do it. All right, then let us help you do it the best way possible within that context that you're giving us. And so that's what we're trying to do and provide here as an organization. And technology helps us ultimately deliver that. So that's what I continue to say is the future of home lending is not being in a box and realizing that things are moving very quickly in our industry. And how do we use the technologies to help us adapt to those things while also making sure that we're not trying to make everybody look the same, be the same, act the same.
All right, Randell, we got two more topics I want to hit. They could be long ones, but we're going to try to keep them short. First, real estate agents. So August 17th, we have the commission sharing practices are changing. A lot of people in the mortgage industry are concerned about that, as loan originators have spent decades, their careers building relationships, primarily with folks who represent buyers in transactions, because that's where a lot of the like retail referral business comes from. How are you guys talking about like the impact of commission sharing changing inside of your business or the focus for loan originators?
It starts with having an open mind, first of all. Ironically, I just left a lunch with a broker he's got 300 agents. Yep. We also have a partnership with another broker that has 700 agents. I had a recent conversation with that person too. And we're talking about how do we as a lender come alongside and partner with you. I really value our real estate agents. I'm so thankful for them in my past and so on. So to answer your question, it starts with an open box. We started about a year and a half ago looking at DSLO. And is there a way to leverage DSLO, that dual licensing, and allowing someone to do both? I've got my own impressions of that, observations. Recently, we've seen some investors say they will not purchase or knowingly, intentionally purchase loans that have both a licensed loan officer and licensed realtor on it. So that's potentially indicating that there's going to be some fears and concerns, maybe more litigation if that's the case. At the core of it, it's making it then simple. And that is, what do we believe in? We believe that our buyers need to be represented. They need to have good information and education. So as an example today, what were some of the things we discussed? At the simplest part of it is this particular broker is really educating their agents to spend a lot more time and be a lot more creative with open houses. Now, some people say, oh my, those are the thing of the past. But the reality is, and I look at myself, we moved in the last year, and we pretty much, that's what we were doing as open houses. We didn't want to get our name on any list or anything. We just wanted to go check out the houses, see if it was something we wanted to get a little more serious about. And I loved this agent's approach, this broker, talking about be more creative. It can't just be on Saturdays, and it can't just be on Sundays, about weeknights and so on. And then asking how can we partner as a lender with them to be able to provide maybe landing pages for those properties, and then complement that agent and that information and so on. So I think there's things like that we can do to partner with them. It's certainly challenging agents. We all know this, that those buyers agents have to demonstrate their value. They have to provide documentation. Consumers are going to have to be better educated about what does it mean, and not be duped in the wrong way, but also trust when it's to truly help them. So I think I'll go back and how I began it. We've got to think outside the box, be willing to look at anything right now. And that comes back to our legal, profitable, good for our people. How can we be an innovator in this? And there's some things that we're baking right now as part of that I think will be part of the futurescape ultimately of where this business is going.
All right, Randall, second current kind of theme topic. So we've had interest rates cooperating, moving in the right direction for at least the last several weeks on some dovish commentary coming out of the Fed and some numbers we're seeing in employment. Relatively confident that we're going to see some type of Fed action in the September meeting, and it seems like the market is pricing that in. Are you starting to see some impact of rates in the sixes come through the business? Like, give us a glimpse into how the rate environment is impacting production.
We are, and as you know, it's still inconsistent right now, which is really hard to deal with because of the chaos. What we've got to do, let's just face it, lenders have to first protect some margin right now. Just like airline industries and others, as you see some vacillations happening, while making sure we're taking care of our customers. So yes, we're seeing a lot of movement right now. We're making sure that we're well educating our consumers. We're making sure that we've got resources in place to track our clients and make sure we know when they're looking for opportunity, and making sure we're using our technology as well to stay engaged with our clients, so we can quickly educate, help them through the process, whether it's when to lock or ultimately when to refinance, and make sure that we have that first opportunity. So that's the technology. That's one of the things we're talking about, lead generation and being ahead of that for our customers. So a lot of education for our customers, which is going to take more time and effort and investment, and that's what we're doing.
And finally, coming back to your analogy on technology, what is your favorite hamburger?
My son makes a really good smash burger on the grill, so I'm going to say it's my oldest son.
All right, that's a wrap. The Gillespie family smash burger is the favorite. Randall, thank you so much.
It's a pleasure. Thank you, Clayton.